Welcome everyone to the Settle In Live session. My name is Chiamaka Gali and I'm the Virtual Events Manager with Settle In. Today we have partnered with IRC SAFE to offer a two-part series on taxes in the US. Please remember when commenting during this live session not to share any personal or confidential information as we are public-facing. Understanding Tax Series. In today's session, we will give a general overview of taxes, including different types of taxes, what taxes pay for, and how we pay taxes throughout the year. In part 2 next week, we will explain how to prepare your yearly tax return filing, including who needs to file, what documents you should have, where to go to get your taxes completed, and avoiding tax-related scams. What are taxes? Let's start with the big question. What are taxes? Tax is money that is paid to the government to help pay for different government services and goods. Because of the different levels of the U.S. government, you pay taxes to the federal, state, and may even pay taxes to your city or local government. At a national level, taxes are monitored by the Internal Revenue Service, or the IRS, and on a state level by your state tax authority. Why is it important to pay taxes? Taxes are important in many ways. Taxes finance government programs and services which most of us use day to day. These services are meant to support services that we all share together as a community. Some common examples of community services include public schools, public libraries, or fire departments. Paying your taxes is also considered part of your civic duty in the U.S. It is required by law and it is a contribution to your community. Not paying your taxes can have negative repercussions. To be eligible for certain benefits like Social Security benefits at retirement, you had to show that you've paid taxes for a certain number of years to be eligible. Lastly, if you're completing certain immigration applications or status changes, they may ask to see records of your tax returns or show you've paid taxes. To avoid any stops or pauses in the process, it's good to pay those taxes and have that record. What happens if you don't pay your taxes? There are some serious repercussions if you do not pay your taxes when required. First, there are monetary penalties and fines. You will have to pay a fee for paying late or reporting incorrect information. These fees are usually percentage and billed every month you don't pay or report the correct information, so it can become a large amount very fast. If you continue to not pay, the IRS can remove money from your paycheck or freeze your bank account until you pay. Another thing to consider is that because taxes are considered a civic duty, when you're applying for certain immigration status changes, like for citizenship, they consider your taxes in the process. Not paying could create difficulties for you during your application process. Lastly, not paying your taxes is considered a crime, and the government can decide to press criminal charges if you do not pay. With this in mind, it's really important to pay your taxes so you do not run into any of these negative repercussions of not paying. What do taxes pay for? There are a lot of things that taxes pay for. Some common services that tax money is used to pay for include schools, public libraries, parks, repairing and maintaining roads, your local fire and police departments. Taxes also pay for other programs like public benefits, Medicaid and Medicare, veterans benefits, the military, and the salaries of local, state, and federal representatives and politicians. Some of these are paid through federal taxes, while most of what you use day to day is likely funded by your state and local taxes. Each state and city has its own way of using their tax dollars. You might hear in the news when your city is coming out with a new budget or has a budget vote, and you can learn more about how that money is used locally. This information is made available to communities because at the core, you are paying for these services. The government must answer to their constituents on how they're using your money. Types of taxes. Taxes can be broken down further into different categories or types of taxes you're paying. The most common tax you see day to day is sales tax or consumption tax. When you buy something, there's a percentage of tax added to it, which usually goes to your state and local government. The big one that most people think about is income tax, which are taxes on the income you're earning. The federal government and most states have income tax, although there are some states where there is no income tax. The rules and rates vary between individual states and the federal system. Next, we have Social Security tax, which provides assistance for people with disabilities or people that have reached retirement age, around 67 years old. To qualify for full Social Security benefits, you'll have to show that you worked and paid taxes for 10 years over your lifetime. For people arriving to the US later in life, it is especially important for you to pay taxes to make sure you hit that 10-year mark to receive full benefits. The full Social Security retirement age is 66 if you were born from 1943 to 1954. The full retirement age increases gradually if you were born from 1955 to 1960 until it reaches 67. For anyone born 1960 or later, full retirement benefits are payable at age 67. Also, people with enough credits can start retirement as early as 62, but their benefits could be reduced. There's also Medicare tax, which covers medical insurance for people as they get older. Property tax is paid if you own land, a home, or in some states, you pay property tax on your car. There are other types of taxes, but these are the main tax types you'll likely see. Similar to how tax money is spent, federal, state, and local governments also set the tax rate for each of these categories. How much will I pay in taxes? How much you can expect to pay in taxes is going to be different for everyone. The main factors to consider when thinking about how much you'll pay in taxes are where you live. Each state and local government sets their tax policy and tax rates. For example, someone in New York is likely paying a different rate than someone in Virginia. Your income level. Tax rate also differ based on your income, with certain income ranges being charged a different tax rate than others. Additionally, your income may qualify you for special programs or credits that can reduce the amount you owe. Finally, family composition. Another factor that is considered when looking at your tax liability is your family composition. Namely, how many people are in your family you are supporting with your income, and how you report this to the IRS. When you complete tax forms, you will select your filing status, single, married filing jointly, married filing separately, head of household, or qualifying widower. Each status comes with different tax requirements. Additionally, you're asked to report how many dependents you care for, children or elderly in your household. All of these factors go into calculating how much you will owe for your taxes. To find tax rates in your area, you can go to the IRS website at irs.gov, go to your state or local government websites, or you can contact a tax professional for advice. You can also use a tax calculator to estimate how much you may be paying in taxes. The most important thing to take away here is that how much you pay depends on your individual situation, but you can be proactive by using these tools to be informed and prepared. How are taxes collected? Now that we have all this background, let's talk about how you'll actually pay these taxes. Taxes are usually paid throughout the year. First, we're paying sales or consumption tax on any purchase we make. If you own land or a home, you'll pay property tax. In some states, you may pay property tax on your own car. How you pay your property tax differs based on your location and situation, but there's almost always an option to pay monthly or at certain times throughout the year. If you're an employee of a company, you'll also have taxes taken out of your paycheck each pay period. If you're self-employed, for example, you own a business, work as a contractor, or do gig jobs like Uber or DoorDash, your taxes are not automatically taken out of your payment, and you have to report this income to the IRS yourself and pay your taxes quarterly. We'll look at these two areas in more detail later in the presentation. We also file a tax return at the end of the year, which tells us how much we're required to pay in taxes and compares that to how much we actually paid. The tax return also tells us if we need to pay more or if the government owes us money. This process is called your annual tax return and is completed between the end of January to mid-April of the following year. For 2023, your annual tax return should be completed between January 23rd, 2024 and April 15th of 2024. If you are filing as a single person and earn more than $13,850 from a job or over $400 from self-employment, you are required to complete an annual tax return. Keep in mind that if you are married and filing together, you're required to file a tax return if you make over $27,700, and it's higher if you're over 65. If you didn't earn these amounts, you aren't required to file, but there are some benefits you may be missing out on, like the potential to get a refund or money back after filing. Part 2 of our series will do a deeper dive into your annual tax return, benefits of filing, what you'll need to prepare, and resources to complete your return. Payroll employees. Now let's talk about the taxes you're paying as an employee of a company throughout the year. When you start a new job with a company, they're going to ask you to complete employment paperwork, including tax documentation. A W-4 form is the federal tax form which tells your employer how much to withhold from your paycheck for taxes. On this form, you'll put your personal information, including your social security number, that filing status we talked about earlier, any dependents you care for, and if you're working multiple jobs. That information is used to determine how much to take out of your paycheck. In addition to this federal form, you might get a state form and even a city form asking similar information to decide how much to hold for state and local taxes. Again, if you're curious about how much these taxes are in your area, you can use an online tax calculator to estimate. At the end of the year, your employer is going to give you a form called a W-2 form, which says how much you paid in taxes from your paycheck for the whole year. You'll need this form to file your annual tax return. A little way I used to remember is that you complete a W-4 before you start working and a W-2 to complete your annual return. Your employer is required to give you your W-2 by January 31st. Pay stubs and pay statements. Let's take a quick look at an example of what taxes look like on your pay stub or pay statement. At the top of the pay stub, we have all your information, the company information, and the pay period. Below, we have your hours and your earnings. This person makes $16 an hour for 40 hours a week, and they got a bit of overtime, which is great. This person is based in New York, and below their earnings, you can see the taxes they paid. As you see here, they took out federal income tax, state income tax, Social Security, Medicare, and then some other New York state-specific taxes for family leave and disability insurance. So, the total this person is paying out of their paycheck towards taxes is $146.39. Now, in this other area, it lists any other deductions they've taken out of their pay stub, such as medical benefits. We have a video on safeirc.org in English that goes into reading your pay stub in more detail. Check out the link here. Net versus gross income. So here we have your total earnings before taxes at $760. This is called your gross earnings. Then below, it lists the amount you will receive after taxes and other deductions, which is called your net earnings. Taxes on this person's paycheck are $146.39, and other deductions are $125. So, this person's net earnings, or the amount they will actually take home, is $488.61. We wanted to share this for two important reasons. The first is, if something doesn't look right to you, or you have questions on what's being removed from your paycheck, you should speak to your employer to explain. It's also important to know how much you will have at the end of the pay period so you can accurately budget for your household expenses. Self-employed. Now we'll talk a little bit about taxes if you are self-employed. Self-employed means you are not an employee of a company. You may own a business, be a contractor, or work gig-type jobs like Uber, DoorDash, Amazon Flex, or you receive payment for other goods and services another way, like eBay, Etsy, Airbnb, or Venmo payments. This also includes cash payments. As someone that is self-employed, you're not an employee of a company and are not being paid by a company through a payroll service. People that are paid directly through a company through payroll usually have a set pay rate, hourly or salaries, and they'll have taxes directly removed from their paycheck. If you receive self-employment income, you have to report your taxes yourself to the IRS. If you make more than $400 a year from self-employment, you must report this income quarterly to avoid a penalty from the IRS. To report this income, you'll want to keep track of the profit you're making and any business expenses, then put money aside to pay your taxes. Put this money somewhere safe where you won't touch it, like a savings or separate account. We generally recommend putting aside about 25% of your profits to be safe and can use a tax calculator to estimate a more exact amount. The key thing to remember as someone who's self-employed is to stay organized, keep record of everything you earn and spend on your business, and keep all receipts and documentation to support your tax reporting. Quarterly taxes are due on April 15th, June 15th, September 15th, and January 15th. To pay these taxes, you can fill out the 1040 ES form on the IRS website and pay the estimated amount directly to the IRS on their web portal. If you need any assistance in this process, you can reach out to a tax professional. Our best advice is that if you are self-employed, it is to stay organized by tracking your business profits, expenses, and mileage if you drive for work as you go, putting money aside specifically for taxes, and paying quarterly to avoid any additional fees. Part 2 in SAFE. Now that you have some more background on the tax system and how we pay taxes throughout the year, Part 2 of this series next week will review preparing for your annual tax return. We will post a link to the event invite in the comments so you don't forget to attend. The IRC has offices in more than 25 U.S. cities offering financial classes and one-on-one financial coaching to discuss your financial situation. For more financial classes on topics such as this or to meet with a financial coach, go to www.rescue.org/where-we-work. Select United States and select the office nearest you. Thank you. I'd like to thank you for joining us for this Settle In Live event. We covered a lot of information. You can return to this recording after the event to review the information again. We also encourage you to follow the Settle In Facebook page for the latest information you need to know as you adjust to your new life in the United States.